Welcome to another episode of Payments Pros, a Troutman Pepper Locke podcast focusing on the highly regulated and ever-evolving payment processing industry. This podcast features insights from members of our fintech and payments practice, as well as guest commentary from business leaders and regulatory experts in the payments industry. I'm Carlin McCrory, one of the hosts of the podcast. Before we jump into today's episode, let me remind you to visit and subscribe to our blog, troutmanfinancialservices.com. And don't forget to check out our other podcasts on troutman.com/podcast. We have episodes that focus on trends that drive enforcement activity, digital assets, consumer financial services, and more. Make sure to subscribe to hear the latest updates. Today, I'm joined by Matthew Goldman to discuss the intricacies of operational compliance for card issuers. We will examine common pitfalls and explore cost-effective strategies, along with simple actions that can enhance partnerships with banks and customers. Additionally, we will address fintech expectations and clarify myths surrounding card issuing compliance. Matthew is the founder and managing member of Totavi, LLC, a boutique consulting firm specializing in fintech, where he leverages extensive operational experience from startups to public company leadership to create innovative fintech products. Additionally, he publishes CardsFTW, a leading industry newsletter focused on credit cards, debit cards, embedded finance, and all things related to card technology. Matthew, thanks so much for joining me today.
My pleasure. Thanks for having me here.
Well, we'll go ahead and jump in and I'll ask you my first question, which is, what does operational compliance actually look like day to day for a card issuer?
I think that every day there's a lot of little tasks that add up to being compliant and passing your end of year or quarterly audits. So a big part of it is making sure everything is recorded and tracked. Right? Every transaction, obviously, that should be in your database, but every customer complaint, every piece of feedback. And then the second part of that is really monitoring the system. I think especially in fintech with kind of the software technology mindset, a lot of folks kind of feel like, oh, I built this thing, I know how it works, and I'm just going to move on. But a big part of financial services is the monitoring and testing of that. And so making sure that your database is storing things properly. You're not accidentally leaking data into the database. Like, a lot of startups may have trouble with leaking personal information into a log, for example, as well as checking, like, did those rewards actually work right? That I promised a reward to a consumer and I said I would give them 5 points at gas stations. And did I check that my system actually records that properly? And then finally, kind of the fraud and suspicious transactions stuff. I think there's a perception that AML is kind of like you can just set it and forget it. It's just a monitoring thing on it. But there's always new, innovative ways people like to launder money. And so you really need to be on the lookout for kind of suspicious patterns and behaviors. And so it's really just about that like daily practice, having your compliance and ops team saying like every day we're going to do these 10 things, we're going to write them down. And so that at the end of the month and quarter and year, it's really easy to have confidence and say like, we know we did all the things we were supposed to do.
Right. And I'm sure some of that is probably making sure that the policies and procedures kind of stay up to date and they're actually tracking with what the business is doing, so to speak. I mean, we've seen so many of the consent orders talk about having adequate policies and procedures. I don't know if you have thoughts on that.
Yeah, absolutely. I think back to that same idea of like set it and forget. Policies and procedures, I think, are thought of that way, but they are not, right? So a famous problem is you did something, but you didn't actually follow a procedure that you outlined in your policies, and then that gets detected. And I think this idea of operational compliance has a lot to do with bringing in your compliance and policy counterparties inside your company into the operational side. Like, I'll give you an example. You might have a policy for adjusting your credit underwriting criteria, right? So there is the policy of what is the credit criteria and the procedure for actually evaluating that, but you also have a policy for making the change. And if you just have the underwriting lead kind of go off and do it, they probably don't do all the steps, but you bring in your policy person and they might say, hey, we need to present this to the board, or we need to have this sign off, or we need to document it in this way, and have someone who's kind of the facilitator of these processes. Maybe not the operator, so to speak, right? The underwriter is saying, I'm going to change the minimum score from 680 to 685. Like, sounds easy. We'll just go plug that in. But you need your policy person to facilitate, okay, you're supposed to present that change, mark the change, do a back test or whatever you have to do, whatever your policy says, and then implement it. And so it can feel, when you say that to people, they're like, wow, that's a lot of process. How bureaucratic. I don't think it has to actually feel that way, but you just want someone making sure you're actually checking those off. Because to your point, where you get in trouble is sometimes not even like you did anything wrong, but you, in terms of, you let a bunch of money laundering happen or something, but like you didn't follow the procedure on how to manage that. And that's where you actually get in trouble with, again, your bank, or your bank in trouble with their regulator.
So we've talked about some of the pitfalls just now, but what are other things that you're seeing that these early stage or scaling card programs, what goes wrong when it comes to their compliance?
I think the biggest thing is just really not keeping up as volume grows. Like, there's kind of always this push and pull when it comes to startups in terms of how do you anticipate growth? How do you hire ahead of growth, right? No one has probably extra money lying around, to hire extra people. But if you get behind, you get in trouble really fast. And I think we all know that hiring great compliance folks is usually hard. Like, there's a limited number of them. It'd be very hard to recruit them, especially into startups. We always joke that, like, if you're a risk manager, you tend to be risk averse and you tend not to work at a startup, but startups need great risk managers. So there's this kind of dichotomy to deal with. And so I think they just get behind, they get overwhelmed by volume. And that's really when you start to see people have trouble, is actually when they're on the upswing and there's some success, which is really disappointing ultimately, because then if they get hit with some kind of consent order or kind of pause or something, it can really, really wreck a company. I mean, I've been part of experiences where it's like a bank might say, hey, we need to put you on pause for 30 days to review this. Well, once you turn off all your marketing, it's kind of like really hard to turn it back on again. And so you do want to continually just invest in that. And it feels like a cost center, right? I think that's one of those challenges, is that a lot of people think of compliance as a cost center, but we really counsel people to think about it as part of a revenue enabler, right? The more that you can stay out of trouble and do things right and avoid fraud and avoid penalties, like, the more you can focus on growth.
So then can you give an example of perhaps like a low cost process that may have a larger impact on staying compliant?
Absolutely. So one of my favorite places to talk about, and where people get in a lot of trouble, is marketing collateral approval, right? Like, especially in the era of social media, right? Like, people want to go out and throw out an Instagram or TikTok, but especially in like direct to consumer, even in B2B, marketing, right? Like, especially if you're marketing small businesses, and you forget to go through and make sure everything's approved. And it's really easy to build like a spreadsheet, right? I mean, I know there's fancy systems for this, but you can like build a spreadsheet. We do this with clients. We build a spreadsheet. We label every asset, like email 52, right? It's welcome letter or whatever, and the date. And we make a PDF of that, like a screenshot. And that's what we send to the bank to get approved. And then when it comes back, we send, a final copy, and we store it in the cloud, right? In a Dropbox or something. And so then if there is any confusion, you can go back through that trail and figure out, where did something go wrong? I had a very funny experience on a program I did a few years ago where our bank was getting audited by the FDIC, and the FDIC didn't like the disclosure footnote on our emails. The bank was like, where is this from? And I'm like, I'm happy to change it. However, I can prove to you that you approved it on this date in this email and told us to use it all the time. And so it wasn't that we didn't have to make the change and be responsive, but it went from the bank saying, you're in trouble, to, oh, okay, we get that. We did approve that. We realize we need to change it. That's not expensive to do. It's not hard. It's just record keeping, essentially, right? And just like, you don't need a fancy system. Email 1, email 2, email 3, just like iterate through them. And the storage in the cloud is cheap. Keep all the versions forever. There's no reason to scrimp on it, because then inevitably my approach is like, you will get in trouble. You will eventually mess up and send out an email that wasn't fully approved. And if you go to your bank and you say, well, we sent 500 emails and we messed up once, they're likely to say like, okay, like, let's not do that again. But you're not a bad actor. You're trying, and we appreciate that.
That makes sense. In that same vein, what do the banks and the BIN sponsors really want from their fintech partners when it comes to oversight and operations?
I think so much banks are themselves risk management organizations. And I think that's hard for especially fintech startup people to think about, which is these folks are more focused on managing risk than earning revenue in many ways. And so I always tell people like banks are driven by what is the regulator going to ask me and how do I stay out of trouble? And so what a bank or a BIN sponsor wants to know is you're not going to get me in trouble. Like that's a primary motivator. And a lot of what they do is centered around like, how do I just stay out of trouble? Because I don't want to have a conversation with my regulator about you, right? Whatever you're doing, I don't want that to be the problem. And so I think that banks want to know that you're not putting them in that situation. They want to build that trust that you are being very transparent with them. You're following the rules. You're keeping records of things, right? Like you're not producing these errors and that you are not trying to, sneak things past them or you're just playing loose too, which also happens again, like startups that aren't really like paying close attention to what they're doing. Because it is mixing that ethos of, famously the Silicon Valley move fast and break things with banking. Those don't go together very well. And so I think banks want to make money. They want to support you, but they want to stay out of trouble more. And it really comes from that risk component.
Right. I mean, we're always telling our bank clients, look, it's your responsibility for all of your fintech programs. You're on the hook for any non-compliance. But having a good partnership is a huge piece of that. And having those open lines of communication, I think, are critical.
Absolutely. And I think that there's a big opportunity on both sides to just really increase communication levels. I think one of the challenges that happens is banks kind of take this like, hey, our SLA is we get 10 days to approve everything and you just have to wait on us. And the more you make a high-paced company wait, the more they want to push the limits, right? And so I encourage banks to think about how can I be ultra responsive, even if it's just to be like, I see this, doesn't look like a problem, but can't approve yet. Or, hey, I noticed this right away. Because if the fintech feels like it's being engaged with, then they're less likely to be like, well, we really need to jump on this social trend and the bank is ignoring us. We're just going to go do it ourselves, right? And I think that that's an opportunity on the bank side, like you said, to build the partnership and deepen it. And I think the reality of a lot of startups, if a bank came to them and said, we'll dedicate a full-time compliance person to you, but you have to pay us $250,000 a year, people would be like, okay, great, because I would rather pay money to get high-speed returns than sit around and wait. And there is this funny thing, like obviously when you're negotiating your first deal, everyone wants to get the best deal. Like that's an obvious thing. But I would love to see banks be like, we'll give you higher level service. You just have to pay for it. And I think a lot of people would choose that. And it would again deepen that partnership, help people be more rabid, because that's what most companies want. They just want to adjust their Google ad a little bit, right? Like they just don't want to wait 3 weeks for it.
Right. No, that makes a whole lot of sense. So talking about the cost of compliance, how do you think these companies should think about the total cost of compliance?
I think companies should think about compliance cost as existentially important. And this goes back to that example of what if a bank puts you on pause over a minor issue? Or what if, heaven forbid, it turns out you're enabling money laundering? Or you're not paying attention to like IT security and you get hacked. So it's really easy to kind of say like, well, it's a drag on us because we have to do all these things. But unfortunately, I've been involved in multi-million-dollar incidents, right? Where it's like, hey, like someone broke in to a system that could take a small company down, right? If you've got $10 million at the bank and someone hacks you and takes $5 million, you're in big trouble. Or on the flip side, again, a bank says, hey, we're uncomfortable with your marketing. So no onboarding for the next 30 days. Like if your company used to be worth $500 million to a venture capitalist, maybe now it's not because your growth stopped. And you have this really complex story to tell. And it's funny because a lot of value for startups is in equity, right? It's in the share value, and you have to have that upward trajectory and growth trend. And so I think everyone to think about is like compliance needs to come very much up front, because without it, I get a zero, right? Like it doesn't maybe by itself generate revenue, but it can easily turn everything into a zero and make there be no revenue.
Yeah, or a negative.
Or negative.
Right?
Yeah.
Like I'm thinking data breach, you've got to send out notices. There's a cost associated with that.
Oh, yeah. And just the distraction factor. I mean, even if you don't have a major breach that costs you a lot of money, to your point, it's like, well, if I have to tell everyone that you need to reset your password and lose that trust, it's really painful. And I think there are companies that, like one thing someone was saying the other day to me was, I encourage everyone to get a SOC 2, right? To do these, like get a pen test, to go through this process. And a lot of folks are like, well, if my bank doesn't require it, I'm just not going to do it. Like, okay, but don't you want to know you're not going to have this problem? And isn't that maybe $30,000 or $40,000 up front worth it versus the huge cost afterwards? But I think it's very hard, especially for earlier stage companies, to make that trade-off.
Right. That makes a whole lot of sense. And then what do you think some of the biggest myths are about card issuing compliance that you wish more founders or products teams understood?
The first thing I think about it is kind of when it comes to fraud and risk and how that's all part of compliance, and that like people, especially those coming in from outside of financial services, just don't realize how much fraud you have to deal with on an everyday basis. And I see a lot of vacillating between like there should be no fraud and let's just see what happens. But then you get your first $10,000 or $20,000 hit and everyone kind of freaks out a little bit. I think like if you've been in the space, you know there's a cost of doing business and you know there's ways to manage it and you know that some friction is necessary. But I also think people don't realize that fraud is not just a monetary cost. It's a reputational cost. It's a program cost. So if it turns out you're losing a lot of money, that's bad in many ways. That's kind of obvious. But also if the bank's like, hey, you guys have a terrible onboarding process, you need to redo it, that's a huge cost as well. And so it's the cards are funny because we all use them every day. Probably everyone listening to this podcast or everyone, you just walk on the street has a debit card or a credit card or both. But they're like hugely complicated products, especially credit cards. Right, they're loans, they revolve, you have to do credit reporting and underwriting and all the transactional stuff and money laundering. And what if you have cash out capabilities? And so they're as complex as like, I don't know, mortgage-backed security or something, but people don't think of them that way because they're familiar with using them. And so when people come in from the outside and they haven't done this before, I think they're just completely overwhelmed by how complex it is. So that myth is really like, it's pretty simple because I have one in my pocket. It is not simple. It's a very hard thing. I usually, when people come to me and say, hey, I want to build a credit card. I'm like, do you really though? It's really hard. Like, make sure you really want to do this because you're in for a rough ride, no matter what.
Right. Yeah.
It's kind of counterintuitive.
Oh, absolutely. There are just so many pieces to the puzzle there. And then pieces that are evolving, like fraud. The fraud is always changing, right? And always something you have to keep up with and address. Again, it's not a set it and forget it, like we just said earlier.
Yeah. One of my favorite examples of fraud that can surprise people is like everyone thinks about cash and money laundering via cash, right? That's pretty obvious. But like there's a lot of money laundering via Apple products, right? Like it's very easy to go like steal a card number and buy an iPhone and then sell that iPhone on eBay. They're like gold, right? They're actually very high value per ounce. I think that's kind of funny. But so people are like, oh, it's really cool. I'm selling a lot of products to Apple. People are buying iPhones. I'm like, are you though? Because that's suspicious to me, and so I think there's this mindset you have to get into when you get into payments about what is the possible angle on this, because sometimes volume growth looks good and is actually masquerading. It's actually fraud growth and you don't realize it right away because what you think of as fraud if you watch TV or whatever, right? Like it's all very simplistic versus the way it happens. And especially with the growth of AI and everything, I mean, fraudsters are smarter than the rest of us, unfortunately, and they're really motivated. So they're really hard to keep up with.
Yes. Any other thoughts or anything else you want to tell our audience today?
Well, I think for people who are starting a program, the most important thing is getting the right kind of team around you, whether that's, working with, great counsel like you all, or finding a bank who really aligns with your vision. I think a lot of people try to push someone to say yes because they want to build the thing. But then if it's a struggle, you're probably going to struggle your whole program with that particular issuer or partner. And so really finding someone who has like a philosophical alignment to what you want to do, I think is a really valuable kind of check as you're looking for those initial partners. Because when you get married effectively to your bank and your processor, it's like really hard to move on from them. I mean, people do it, but it's a huge expense and it's very hard. And so spending that extra time, taking that beat to really say like, I have the right crew around me is just so important.
Well, thank you so much for joining us today. And thanks to our audience for listening to today's episode. Don't forget to visit our blog, troutmanfinancialservices.com, and subscribe so that you can get the latest updates. Please make sure to also subscribe to this podcast via Apple Podcasts, Google Play, Stitcher, or whatever platform you use. We look forward to next time.
Copyright Troutman Pepperlock, LLP. These recorded materials are designed for educational purposes only. This podcast is not legal advice and does not create an attorney-client relationship. The views and opinions expressed in this podcast are solely those of the individual participants. Troutman does not make any representations or warranties, expressed or implied, regarding the contents of this podcast. Information on previous case results does not guarantee a similar future result. Users of this podcast may save and use the podcast only for personal or other non-commercial educational purposes. No other use, including without limitation, reproduction, retransmission, or editing of this podcast may be made without the prior written permission of Troutman Pepper Locke. If you have any questions, please contact us at troutman.com.